Hey guys, and welcome back to another video. In today's video, I'm going to be explaining how exactly Treasury auctions work. Now, obviously, the Treasury Direct website itself has an explanation on this, but I would argue that it's not very good and not very thorough. It misses out on a lot of details, and honestly, just reading through this, I didn't understand much. Then you have other options like this 11-page PDF from a book that I'm sure explains it super well, but I'm going to be honest, I didn't even read it because it is so wordy and hard to understand that this is not the way to go. So in today's video, in under 10 minutes, I'm going to be explaining to you how exactly these work. The first thing that we're going to need to understand is that there are non-competitive and competitive bidders involved in this. Now, the only thing that we really need to know about this is the fact that these non-competitive bidders are us. They're your average people, and the maximum bid limit for them is 10 million. Obviously, a lot of people, almost nobody is going to be able to actually do that, but that is the limit, and the non-competitive bidders actually make up a very, very small amount of the total bidding that is done on these auctions compared to your competitive bidders. Now, these would be your large institutions, and you can see the limit on these is 35% of the total offering. And to give you an idea of offering size, these can easily be over $20 billion. So you know that these people are dealing with large amounts of money. Another big difference to understand is the fact that non-competitive bidders do not get to choose the rate that they wish to receive before putting in their offer, whereas the competitive bidders do get to specify the rate that they wish to receive, and this is super important to the auction process. Now, I've made this little chart to heavily simplify this process. It's a little more complicated than this, and the numbers are also a little bit more complicated. Obviously, we're not dealing with exact dollar amounts, but this will still serve to get the point across and show you how exactly this works. So let's say for the purpose of this video, we are the US Treasury and we are doing a $25 billion offering of some sort of bond. Let's say this is for the 30-year bond. Now, when the actual auction happens, this is sort of how it would work. It starts off with the non-competitive bidders getting a guaranteed spot. Once they place their order, they guarantee that they are going to purchase the bond. The question then becomes what exactly their rate will be, because you might remember that they do not get to choose their interest rate as indicated by the black box. In this case, let's say there is $100 million worth of non-competitive bidders offering to purchase these bonds. Now we have our list of all of our competitive bidders, again keeping in mind that these are large institutions with ginormous purchase orders. So you'll see that the amount on the bid is much bigger. These numbers are in billions. Now, the way that this auction works is in Dutch auction format. Some of you might be familiar with that, but if you're not, basically the concept is that it starts with the higher price, which in this case would actually be a lower interest rate. The people that are willing to purchase these bonds for a lower rate than some of these people at the bottom. So it starts there. In this case, the lowest group or the highest price would be the 4.2% bidders. Now we have 25 billion total dollars of bonds available, meaning obviously the government is going to take these people that are willing to take a 4.2% rate and accept their offer. So they're going to get their bonds that they wish. And when you combine that number with the $100 million in non-competitive, we're already up to $1.1 billion. Now we can continue to follow this chart down. You can see in this example, there are 3 billion people that are willing to take a 4.35% yield. And you'll see that the number of bid amount is going to increase as the interest rate also increases, because obviously more people are going to want a higher rate. And so all 3 billion of those purchase orders is going to go through, bringing our total up to 4.1%. Then we have 4 billion of a 4.4%. All of those are going to go through, bring it up to 8.1 total billion dollars accepted. And then we have our 7 billion people who are willing to take a 4.5% interest rate, bringing our total up to 5.1 total billion dollars. And this is where things get a little bit tricky. Now in our next group, we have $12 billion of purchase orders for a 4.65% interest rate. Now you might see if we were to accept all of these, it would bring our total purchasing up to 27.1 billion. And in this case, we're only offering 25 billion. So what happens next? At this point, all of these people who wanted to purchase bonds at 4.65% are going to get a portion of their order completed, and the other portion of their order is going to go unfulfilled. They'll portion out these orders until it reaches their total, which once again in this case is 25 billion, and then they're done. What this means is that the $15 billion in orders and the $25 billion in orders for the 4.7 and 4.9% interest rates are going to go completely unfulfilled. Now at this point, you might be thinking that these large institutions are going to want to play the game of getting the highest interest rate that they can, but the interesting thing is that every single order that was fulfilled is going to be fulfilled at this 4.65%, even if they were willing to take it as low as the 4.2%. Now once that's all done and the auction date has been completed, those results will then be posted, and the non-competitive bidders will be informed of what their rate will be. Following a couple of days is the issue date, which is the date that the actual bond, bill, or note will be sent through and the money will be withdrawn. Now that we hopefully understand a little bit better from that example how these auctions work, let's go ahead and have a look at what the Treasury publishes once the auctions are complete, started with the non-competitive section of a 30-year bond. Now these results are super simple because once again, this has nothing to do with the rate. The only thing that it changes is the amount of bonds available for the competitive bidders. So in this case, we have $29 million worth of bonds being purchased by average people like you and me. Now here are the competitive Treasury auction results, and hopefully this makes a whole lot more sense now that we've gone through that example. Starting down here with the low yield, you can think of this as the top bidder on that previous chart that we just looked at. The one who's willing to take it for the least was at 4.23%. The median yield, just meaning the middle, was around 4.28%, and the high yield was 4.33%. Now you might wonder what allotted at high means, but if you remember when I was talking about partially filled orders, that would be the allotted at high percentage, meaning that the people who bid the 4.33% received 66.54% of their order because there wasn't enough bonds left over. Now I've just told you that the high yield was 4.33%, so why would the interest rate be just 4.25%? And the answer to that is the fact that the price is only $98.64. So when you factor that in, it will come out to be a yield of 4.33%. The last thing that we're going to look at in today's video is this little bottom chart, which just outlines the things that I've just showed you. You can see that there was a total of $55 billion of bids, but only around $22 billion were accepted. If we go back to the non-competitive bidding for a second, you can see this is because the total offering amount was $22 billion. Now in terms of the non-competitive bidders, you can see that all of that 29,833,000 was accepted. Meanwhile, only 21,970,000,000 of those competitive bids were actually accepted to come out to our $22 billion total. Now this bottom part of the chart also plays a role in auctions. We could even talk about price tailing, the cover to bid ratio, and what it means when an auction stopped through. But those are all sort of nitty-gritty details that I'm going to be making another video about in terms of these Treasury auctions, so keep an eye out for that one. I hope you did go on to enjoy today's video. If you did, make sure to leave a like down below. If you still have any questions or comments, leave them in the comment section down below and we will get back to you. While you're down there, click subscribe so you don't miss that upcoming video. But other than that, we'll see you in the next one.